Okay, so now you understand what are support and resistance and how we can make use of those to be able to predict the beginning of an impulsive move and the end of an impulsive move, by the use of our swing points being turned into support and resistance, right? So that is a very, very powerful technical tool to be able to predict the impulsive move. But another very, very powerful way to be able to predict this impulsive move, the end and the beginning of those, is actually by making use of trend lines. So the market makes new swing highs and lows when it's moving, right? So as we said, market moves up and down all the time. Price tend to respect a linear level where it is identified as a trend line. So the bullish market would tend to create a linear support. So what we mean by this is that when the bullish market is going up like this, you can see that it's creating a linear support. So remember what we said, support it basically is a structure that prevents the price from breaking down to the downside. So it's supporting it all the way up, and then when it's in a bearish market, it will create a linear resistance level. So when it's going down, it will be the opposite. So as you can see, it will be on the other side, right? So it will be resisting the price from breaking to the upside. So that is basically what we mean by linear support and linear resistance level. So how to draw trend lines? To draw quality trend line, you will need at least 2 minimum swing points. As I've been stressing throughout this whole course, it's very, very important that you have at least 2 minimum swing points. So the levels must be clear and connect with each other. Don't use smaller time frames to draw trend lines. Always use H1, so the 1 hour and bigger time frame, to find obvious trend lines. So do not try to force a trend line. Very, very key. Do not try to force a trend line. Try to focus on how to draw trend lines in a trending market. The reason why we are actually making use of these trend lines is basically to predict the beginning of an impulsive move in a trading market. So next I will actually show you in detail how we make use of these trend lines to be able to trade them in combination with the price action trading setup. So let's jump in straight into it. So as you can see in the picture above, the market respects the trend line, and when price approach it, the market reverse and continue in the same direction. So it will do this until it actually breaks out of the trend line. So it breaks out to the upside or to the downside, depending on the market structure. So in a downtrend, it will actually break to the upside, as you can see right there. It broke through, retest, and then the market just continued all the way up, right? So but before that, it was just when it touches that point, it just fell, right? It just fell until it came here when it broke through and then retest, and then the market basically, that was the reversal of the trend. The uptrend basically started. So when the market moves this way, trend lines help us to anticipate the next impulsive move with the direction of the market. So in an uptrend, it will basically look something like this. As you can see right here, we have something similar. So as you can see, it has respected the points. It has respected the points until it broke through. So the moment that it broke through, it then started a downtrend. So that's basically what is happening right there. But as you can see, before it went there, it actually retested a level that was somewhere here. So it retested a level, a very, very important level. As you can see, this level was a very strong support level that was there. So we basically make use of both the support and resistance and these linear lines right here to be able to get the best out of everything. But as you can see, there was a strong support that was supporting the market right there, and then that is where it came to retest before going down. So it's not always that it will actually come back to retest the linear line. It might also retest these horizontal lines. That's why we said you don't just focus on one price action trading strategy. You have to incorporate all of them together to be able to capture all the setups, because in this instance right here, as you can see, if you were waiting for this market to come back to retest this level, you would have missed the opportunity of this end of the retracement area, which started here and just went here. So you would have missed that. But if you have your horizontal lines as well, you'll be able to understand that, okay, there's a potential that the market can come back and retest this level over here instead of coming back all the way here, right, and then continue the downtrend. So that's why we put it all together and not just take trades based on a single price action plan. So as you can see in this market, the market respects the trend line, and by drawing it right away, you can see that you can easily predict the next movement to upwards or downwards. So this is all trending markets now. It's clear and simple. All you have to do now is to open your charts and try to find previous swing points, support and resistance, and trend lines as well. So this exercise will help you to understand how trending lines move, also how to predict high probability entries in the market. So make sure that you play around with those and be able to have that confidence to be able to spot these different things. So remember, only start looking for these on your 1 hour time frame, and on your 1 hour time frame, and the 4 hour, the daily. Those are the best charts or the best time frames to look for support and resistance levels and our linear trend line.